Welcome to The Explainer. Today we're digging into the latest financials from Yamada Green Resources. Now on the surface, the numbers look pretty bad, but the real story here is way more interesting. We're going to break down what's really going on and what it all means if you're looking at this as a potential investor.
Okay, let's just jump right into the big, scary headline number. In the last 6 months, Yamada's profit just plummeted by over 66%. Yeah, a number like that is definitely going to make you stop and say, whoa, what happened here?
And that immediately brings up the million-dollar question. I mean, if you look at their income statement, their revenue barely budged. It was basically flat. So if they're bringing in the same amount of cash, how on earth did a massive 2/3 of their profit just vanish?
But before we go hunting for that missing profit, we've got to look a little closer. See, this isn't just a simple story of a failing business. Believe it or not, there's actually some really good news hidden right at the top of their report.
Okay, so here's where it gets interesting. Look at the difference between those two lines. While revenue, as we said, was flat, the company's gross profit, now that's the profit they make directly from their main business of renting properties before you factor in all the office and admin costs, that actually jumped by almost 16%.
So what this tells us is that Yamada's fundamental business, the thing they actually do day to day, is getting better. They're becoming more efficient. They're squeezing more profit out of every property they own. And that, right there, is a really strong signal about the health of their core business. All right, so if the main business is actually doing better, then something else must have gone seriously wrong somewhere else. And this is where we find the real culprit behind that 66% profit drop.
And this slide just lays it out perfectly. On the left, you've got your regular admin costs. They went up by about 10%. Not great, but, it's manageable. But then you look to the right. Other operating expenses just exploded. I mean, it skyrocketed by over 240%. That's not a red flag. That's a full-blown siren going off. And when you dig into the fine print of the report, you find the smoking gun. Almost that entire insane increase came from one single thing, a foreign currency exchange loss of nearly 2 million RMB. This one item, this is the villain of our story.
So what does that even mean? Well, Yamada's a Singapore company, right? But their main business is in China, and they also work in Japan. So when the value of the Chinese yuan or the Japanese yen shifts against the Singapore dollar, the company can either make or lose a ton of money just on paper. And in this period, those currency shifts went against them in a huge way, and it just wiped out a massive chunk of their profit. Okay, so mystery of the missing profit solved. But for any investor, profit is only part of the puzzle. You also need to know if the company's actually stable. Do they have cash in the bank? So you got to follow the money.
And a quick peek at their cash balance? Well, it's another eye-opener. The amount of cash the company had on hand was basically cut in half. In just 6 months, it dropped from almost 21 million RMB down to 10 million.
Which, naturally, brings us to the next big question. A company doesn't just burn through half its cash for no reason. So, what exactly did they spend all that money on?
Well, the cash flow statement tells a very clear story in 3 parts. First, they went on a big shopping spree, investing over 21 million RMB in new properties and equipment. Second, to help pay for all that, they borrowed over 11 million in new bank loans. And third, they still returned 1 million RMB back to their shareholders as a dividend.
So let's connect all the dots here. We've got a profitable core business, a huge currency loss, and a massive investment spree. What does all of this tell us about where Yamada's trying to go?
The story that's taking shape here is one of aggressive growth. By spending so much on new properties, management is clearly making a huge bet on expanding their rental portfolio for the future. They are definitely playing offense. So for you, the investor, it really all comes down to this fundamental tension. On one hand, you've got this huge opportunity. All these new properties could generate a lot more revenue and profit down the road. But on the other hand, you have the exact risk we just saw play out. Their international footprint makes them extremely vulnerable to the wild swings of the foreign exchange markets.
So after peeling back all the layers of this financial report, what are the most important things for a potential investor to really walk away with? All right, let's boil it all down. First, don't be scared off by that scary headline profit number. The core rental business is actually getting stronger, which is a fantastic sign. Second, that profit drop wasn't from a broken business model. It was from an external factor, that big loss on foreign currency. Third, the company is spending aggressively on new properties, which means taking on debt and using cash today for potential growth tomorrow. And that leads to the final, biggest point. Investing in Yamada is a bet on 2 things: that their property investments pay off, and that the currency markets don't bite them again.
And finally, just a quick and important reminder. This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.